All right, once again, today's on 25th of January 2026, and of course, as the RatePulse market, of course, I'm here to give a weekly outlook on what we shall be looking on different currencies based on fundamentals and also technical analysis. I go by the name of Eric Kelvin. I'm a currency trader and also a trading coach at RatePulse Market. Now, to begin with, now we are looking at what we call the week, which will be starting, that is on 26th of January 2026. Now, to begin with, I will head to Trading Economics, which is a very impressive website whereby we're going to read what you expect for the coming week. Now, here's the thing. The final week of January will be pivotal for global economy, featuring major earning results, monetary policy decisions, and data releases from the largest players. The Federal Reserve will have its first policy decision of the year aimed amid increasingly constraining takes by FOMC members on the appropriate rate path. Meanwhile, results by Apple, Meta, and Microsoft will unveil fresh signals on AI demand and the data center investment, with major companies in software, finance, healthcare, and manufacturing, and energy also hosting calls. US data will be headlined by durable goods orders and the PPI. Also, the Eurozone and Canada will publish their GDPs. Germany, Spain, and Australia anticipate their inflation rates, while China will unveil its first set of data for the year in their official PMIs. Rate decisions are expected in Canada, Brazil, Sweden, and Bank of Japan will publish meeting minutes. That is all what we expect for the coming week, which will begin tomorrow, being on 26th of January 2025. Now, here are the few things that we're supposed to focus on. Now, we've already read on what we expect for the coming week, whereby most of the time we can see that we shall be having what we call the Federal Reserve will have its first policy decision of the year, aimed increasingly constrained takes by FOMC members on appropriate rate path. Now, having covered that, first of all, we are going to cover on the risk sentiments in terms of globally. Now, the first thing that we are going to check on my chart, you can see I have a VIX index, which is actually very good when we are looking at are we in the risk on or risk off. Currently, we can see that actually the index is actually reading at 16.09, which is actually below 20%. And therefore, this gives us that we are in the risk on. Now, we need to understand a few things. Even though the index is actually below 20, which is showing that we are in the risk on, we need to understand there's a lot of geopolitical uncertainty which is actually happening, whereby most of the time we had the issue about Venezuela, whereby the Venezuela president was actually in one way or the other captured by Donald Trump, who is now the president of the United States. And again, we had the issue related to whereby Trump was given threats in terms of tariffs to some of European countries. And this was actually based on the Greenland capture, whereby Trump was actually delivering a message in Davos, and whereby he said that actually he's looking forward to have a very good a very good negotiation on how to achieve Greenland without using force. Now, that is actually a lot of things which are actually happening, even though the VIX index is not actually showing, where it's still saying that we are actually in the risk on. Now, we had another issue. I don't know whether I can check on that issue. We now next time I'll be having every day. I'm trying my level best. We shall be having those kind of readings, but currently I'm just reading from where just a note whereby I was collecting last week. Now, something else we need to understand is about we still had another issue whereby Trump was going into conflict with Iran based on a protest what kind of demonstrations are in Iran, whereby most of the people were killed, and Trump is saying it's against the human rights, and therefore it's also adding up to geopolitical tension. Now, for that one, to clarify that one, of course, there's this kind of a data of document or sheet whereby we've prepared as the RatePulse market, and actually it's very good when you're doing your analysis. Let me just try to zoom out so that at least we can get to see whereby have I marked. Now, this is the thing. When you check on this one, we have a lot of things to cover. We have GDP. Let me just go through. You can see now on the first, we have currency, we have GDP, inflation, interest rates, unemployment rate, bank stance, real rates, which is not, I have not yet actually filled. So we shall be doing it together probably, maybe later. Then we have global geopolitical tension. There are two types of GT. In terms of when I say GT, I mean geopolitical tension. We have whereby we have individual country geopolitical tension. We can see now we have some countries whereby we have yes, and then others we don't have. No, like again we have GGT, which is actually global geopolitical tension support, and this gives now a bullish vibe for that currency. Now on the GGT, that is now global geopolitical tension, we have, which is actually yes, and that is now the issue I'm explaining about, the Venezuela issue, the Iran, the acquiring of Greenland, and then we need to pay much attention to that. Now in terms of that, so we are in the risk on, but actually I'm not agreeing with what we call the VIX index, bearing in mind we have a lot of issue which are currently happening. Now, having covered that, we need first of all to go and check on something else. Now, we have already covered the risk off and the risk on. That is now the global sentiments. Now, the next thing we need to cover is actually the dollar. So we are going to do on the dollar. You can see now from the last, if you have not watched the last weekly forecast, you can go and check. I'll try my level best to have my link over here, whereby I was covering that, saying that dollar, we might see a very strong dollar due to what we call the Federal Reserve moving or shifting from the interest rates cuts. Let me show you. When I go to what we call CME group.com, whereby we shall be having Fed interest rates watch tool. Actually, you can see, let me try to zoom out so that at least you can see the price is kinda pricing out of the interest rates cut, and we might also have the Fed holding the interest rates. Now the thing is very simple. If you check on over here, I will try my level best to have most of the educative things to point out, and maybe now if you check on this kind of stuff readings here, over here, yeah, we have on January we were expecting that the Fed actually were to go and cut the interest rates, maybe on what they were saying, since they were saying that we shall be having 25 basis point cuts in 2026, and actually this is kind of being priced out. We can see now they are anticipating that the first 25 basis point cut will be on June 20, that is now 17th June of 2026, and we are still in January. So and again, if you check very well, the next next cut will be on December 20, that is now on 9th December 2026. That is when they are expecting to have the interest rates cut, and then if probably we might see the data actually improving due to what we call unemployment rate, we might also see the price actually the cutting pushing to the upside. Something else we need to cover is if I happen to head over to trading economics, here's the thing. If I happen to go and actually push back, then head over to what we call the United States. The data is actually here. You can see very well that if you had to listen to Joel Powell, the last meeting when they were actually making interest rate decision, you could hear him say other two interest rates in 2026. Now, you need to pay much attention. The reason why they were to cut the interest rates is because of the unemployment rate, whereby the labor sector was actually doing worse. But recently we've had unemployment rate data coming out, and actually we are seeing some improvement, whereby the unemployment was actually at 4.5%, and currently we are at 4.4%, showing that the labor sector is actually improving, and then the unemployment rate is actually dropping. And that now gives a very good anticipation that the Fed might not be in a position to cut the interest rates rather than to hold the rates, therefore giving us a shift of what bank stance. Now, here's the thing. If you head over to the Fed, to our fundamental outlook, actually the data that we've already prepared, when you go to USD, you can see on the dollar, we are actually saying that there is a shift. There is a shift. Let me show you. There's a shift. If I happen to put green, you can see on the bank stance, we are moving from cuts to hold, and therefore we might see kind of fundamentally a strong dollar. But you need to pay much attention too. That is now fundamentally, because we've seen the inflation or the GDP is actually, let me show you. Let's head over to this data and head over to GDP. It is quite very simple if you pay much attention to. On the GDP, we can see that actually GDP is actually growing, whereby there was a growth from 3.8% to 4.4%, whereby the data is reading, or if you happen to read with me, the US economy expanded at an analyzed rate of 4.4% in quarter 3 in 2020, slightly above the initial estimate of 4.3%, and marking the strongest GDP growth since quarter 3 2023. And therefore that shows that the United States economy is doing very well. Now we need to cover something else, that is now the inflation rate. If you check on the inflation rate on the United States, the inflation rate is actually at 2.7%, sorry, which is actually a very good thing, whereby in this format, whereby the inflation is actually kind of showing some slow. That is now drop. Now you need to understand, when the inflation is actually dropping, that shows signifies something great, since it is moving towards what we call the Fed inflation target, which is at 2%. Now we need to pay much attention to something else, that even if the inflation is actually dropping, whereby there was a time that we saw that the inflation was actually at 3%, and currently the inflation is at 2.7%, which is also a drop. Even though it is a drop, we need to understand it's still way high compared to the Fed inflation target, which is 2%, and that is healthy for the economy. Now, but there is that kind of a gradual drop. Something else you need to cover, it is quite simple, is what we call the unemployment rate, which is actually was kind of leading the Fed to be cutting their interest rates. Let me head over to unemployment. If we check on the unemployment rate, we can see that I think this one I already had, whereby there was a significant drop all the way from 4.5% to 4.4%, which is sorry, not a great, but actually a slight drop, which is showing that actually the labor sector is actually doing now nicely. Having that it is looking at in terms of buyers. Now on the dollar, I will remain bearish for the dollar. I still have an issue with the sentiments, regardless of the fundamentals showing that we are actually moving to what we call shifting from cuts to hold, which is a very good bull for the dollar. But on my side, I will actually, or on our side, or my point of view is that actually the dollar will be weaker. Let me explain. Regardless of the inflation or the GDP actually showing some expansion, then on inflation showing that kind of a slight to the downside, moving towards what we call the Fed inflation target, then the interest rates being at 3.7%, and then we need to check on something. Unemployment drop. In terms of fundamentals, it's actually bull for the dollar. But we need to understand, in terms of what we call the country geopolitical tension, we have a lot of things which are actually happening in the US. And that is now on the issue related to Federal Reserve independence, whereby actually seems like the independence is actually being altered by the politics, whereby most of the people are saying that the Fed, it's not independent as it used to be. Since we have Trump saying that we should be cutting the interest rates, we should be cutting the interest rates regardless of the data showing whatever is actually to be done. So on the dollar, I will remain bearish. Let me check. On Friday, we had this crazy move to the downside, violating all the demands. It's because of something which has actually happened on Friday, whereby there was an intervention, there was a fear or panic of intervention from the Bank of Japan. Let me go and delete everything so that at least we can now redo again. If in terms of sentiment, if we are going to be showing some improvement on the issue related to the sentiment, okay, I'll be looking to buy the dollar. But for the time being, I'm looking for a very weak dollar across compared to other currencies. Therefore, if I was to do the analysis, I will be waiting for a very good pullback. Let me just delete all this. Why the slow? I don't get to understand. Just a minute. All right, yet. Come on. It's kind of lagging, but it's good now. All right. This is what I'll be looking at on the daily time frame. This is now the DXY, that is the dollar index. So I'll be quite very simple actually. On this, we can see we had these crazy moves violating this kind of a demand over here, or violating these laws over here. So we had this crazy move after the intervention, and I feel that actually we might also continue with that kind of a crazy move, because even though the fundamentals are showing some kind of a strong dollar, we still have what you call the sentiment crazy things. Sorry for that. So we still have crazy things in terms of sentiment, risk sentiment. So we might see a push to the downside into this. Yes, until we have what we call sentiments aligning with the fundamentals. Otherwise, I'm still bearish on the dollar, and this is actually what I will be looking for. We might also be waiting for the price to come back. We still have that kind of a zone over here. So in terms of dollar, this is what actually I'll be looking for. We might see that kind of a supply over here. We have that kind of a supply over here, and then I will be waiting for the price to come back over there. Then we can have the dollar pushing to the downside. But if the sentiment will change, whereby we shall be having the Federal Reserve maintaining its independence, and also we have these kind of candidates who are the Federal Reserve chairs, like this guy by the name Kevin Hassett. So if the uncertainty tends to remain cool, we might also change that, whereby we can see the dollar pushing, violating that kind of a supply, then a retest, and then move to the upside. But currently, I'm bearish for the dollar. It is quite very simple. That is now the dollar. Let's head over to something else. Let's go to euro. Euro seems to be into very good condition. Let's head over to what we call the fundamental outlook, which is a very good table that we have already prepared. It is quite very simple. Now, on the euro, we can see that actually the GDP is at a good condition, and then inflation. The first thing we check on is on inflation. Inflation is at 1.90%, which is actually below the target, but is not that bad. Again, we have what we call the interest rates being at 2.15%, and then the unemployment rate not that bad, and then the bank stance is actually hold. But the geopolitical tension in terms of country, we have none, which is actually a very good for the dollar. Just a minute. All right, sorry for that interruption. Let me just continue with whatever I was doing. So the first thing we need to check on the euro is actually the inflation rate, which is actually at 1.9%, which is in good condition. Shows that, but it is not, it's below the target, the ECB target, but is actually in a very good condition, not that bad. Something else you need to check is on unemployment rate. Unemployment rate seems to be at 6.30, which is kind of higher, but we have to listen to what we call the bank stance. The bank stance on the euro, they are looking forward to be holding the interest rates, and they are saying that they are actually in the very good condition. So my bias on the euro is very simple. Yes, I'm bullish for the euro. I'm bullish for the euro, not unless there is a data which will be coming out, and then we might see our bias changing. On the euro, let me just go head over to eurozone. On the eurozone. Of course, here it is. Very simple. On the euro, something else you need to check. It is on the GDP on the graph on how it is performing. It is very simple. We've seen that the GDP is actually was in a growth expansion. If you check on the bar graph, whereby it was moving all the way from 0.1% to 0.3%, which is actually an expansion. Something else you need to check is on the inflation rate, which is actually dropped the last time, whereby we had a 2.1%, and currently we are at a 1.9%. Inflation rate, it is quite very simple. Let me show you. Come on. So if you happen to go and scroll down all the way down to the what? To the bar graph, this is actually what is happening. We can see the inflation is dropping all the way from 2.1% to 1.9%. At the end of this video, I'll be giving out what kind of trades I took last week and actually how we performed. It wasn't that kind of good. We had some wins and some losses, but actually we managed to be in a very good percentage in terms of gain. That is now simple. So on the euro, I'll be remaining. On the euro, I'm remaining bullish. I've been bullish for the euro for quite some time, and this is actually what we're looking for. I was looking for the euro to drop all the way down here, then push to the upside. Currently, seems like we didn't manage to get into that position, but we pushed to the upside. We managed to push to the upside. So what I will be looking next is actually for this kind of a demand over here, or maybe a pullback all the way from this kind of a retest. Let me just have my demand zone over there. So actually this is on what I'll be expecting on the euro. So I'm expecting for the euro to all the way pull back and then push continuation to the upside. That is exactly what I'll be looking on the euro. I'll be expecting a pullback all the way from here and then push to the upside, which is quite very simple. In terms of fundamentally, we are bullish, and we don't have any kind of geopolitical tension in the country. So we might see, or in the area. So we might see that push to the upside. All right, something else you need to cover. That is now the euro. I'll be expecting that. Let's go and cover something in the United Kingdom. Let me just be honest. Let me try to hurry up. On the GBP, on the United Kingdom, I have been bearish on this pair. Unfortunately, we've seen on the last week, the sterling pound trends seemed to have already pushed to the upside, violating this kind of a supply over here, which I had already drawn. But I'm still bearish on this one. We might also see the price pushing below. In terms of fundamentals, I have not confirmed whether we still have any kind of a physical challenge in terms of physical tension. In terms in the Bank of England, So let me just go straight forward and cover what I'm expecting for come this week. To begin with, I'll head over to what we call the fundamental outlook, which we have already prepared. So on the United Kingdom, we can see this one I'm bearish, but I will have to confirm later whether we have physical, that is now geopolitical tension within the country. That is the only thing that I have not yet confirmed. Now, on the United Kingdom, let me just head over on the that is now the trading economics. It is quite very simple. Let me just head over to United Kingdom for the coverage. It is quite very simple. I think we've already remained now with the Japanese JPY and then Swiss franc. So on the United Kingdom, it is quite very simple. Let me just check on the inflation. The first thing we check on on the inflation. Last week we had the inflation. Actually, here's the data. We can see UK consumer price inflation rose to 3.4% in December 2025, up from November's 8-month low of 3.2%, slightly above the market expectations of 3.3%. Now, there is a thing we need to pay much attention to. We have already seen that inflation is actually rising all the way from if I head over to the bar graph, you can see we had the inflation shooting all the way from 3.2% to 3.4%. And therefore, this is now something not good in terms of inflation. Because currently, if you happen to head over to fundamental outlook, we can see the bank of, that is now the GBP, under GBP, we have what we call the bank stance, like we are looking forward to be cutting the interest rates. The reason why they're looking to be cutting the interest rates, it's because of the unemployment, high labor or weak labor sector. Let me go to unemployment rate. You can see on the bar graph on the unemployment rate, you can see that we have already remained at the top, whereby the unemployment is actually very way high. And therefore, they are looking forward to be cutting the interest rates. And here comes the data of the inflation, which is also showing some positivity to the upside. So on this pair, I'm not with straightforward buyers whereby I'm looking to sell and all this. It's because we might see the Bank of England coming and saying maybe they will be shifting their tone to be hiking the interest to control inflation, since the inflation and unemployment rate are actually way high. So for the GBP, actually, I will stay vigilant on this pair, not unless there is another data which will be coming out to kinda give us a clear bias on this pair. For that case, I will have to choose to remain neutral. Something else you need to check on is actually the Japanese yen. Japanese yen on the GBP, I will not stay, I will just have to stay away. So here's the thing. On the Japanese yen. The fundamental outlook, you can see that the actual inflation GDP is at a negative 0.60. Then we have inflation is at 2.1%, which is actually good. And then the interest rate is as they chose to remain at 0.75. And then we still have the unemployment rate, which is 2.6%. Since that fundamentally, in terms of Japanese yen, in terms of fundamentally, we seem to be in a bullish, but we have what we call the geopolitical tension in the country, whereby the Katakaichi, the prime minister, is actually calling for some election, and I don't know which actually the election will be the main agenda for the election. I have no idea. So I'll be bearish for the Japanese yen this coming week. So we might see that kind of there was a push to the upside, but I feel this is an opportunity to buy, to sell high. And the reason I'm looking forward is because of the geopolitical tension and also what you call the real yields. Now the carry trade. So we might see the Japanese yen pushing to the downside. CHF, now the Swiss franc. In terms of Swiss franc, we've seen that the Swiss franc is actually pushing to the upside, regardless of the data, some fundamentals showing, or the carry trade, showing the negative side of the the Swiss franc is actually bearish. But we have this kind of fundamentals. Let me show you. We have what we call the GGT support. That is now the global geopolitical tension support, whereby we have a lot of things which are actually currently happening, and we might see Swiss being favored as a safe haven. So we have Euro being kind of strong, then CHF being kind of strong in terms of what? This is actually what I will be looking for. Remember, the color where I'm saying that the buyers is not actually based on the fundamentals, but I'm just trying to weigh below between the fundamentals and this, what we call the risk sentiment in country and also the global. So I'll be bullish on the euro and bullish on the CHF. On the Swiss franc, we might also see kind of a pullback all the way down here, then the push to the upside. It's that simple. Having said that, let's go and check on some few trades I took last week. It is quite very simple. Let's head over to euro. Euro, I have been bullish on the euro for quite some time, and we had this pushed all the way to the upside. We took all the trades. I think that was around 185 pips, which is actually very good trade. I took that trade on when was that? I took this trade on January to 19th. I've been holding for a whole week. That is now after the tariffs fear, the rate from Trump. So we had this push all the way to the upside. Currently, I'll just have to delete everything since that trade is already, I've taken that kind of a trade profits. So actually what I'll be expecting is I'll be waiting for another pullback for the price maybe to get into this kind of a demand zone over here. Then on the Euro USD, we can see push all the way below there and then push to the upside, bearing in mind that actually Euro is bullish and then USD is bearish. So that is actually what I'm expecting. Now something else we need to check is on Euro GBP. On this pair, I've been bullish on this pair, and I'll also be continuing to look for trades. We had this kind of a trade which we were holding. Actually, we pushed all the way to the upside up to this position. We managed to take after some few profits. Then after that, we took a loss around within this zone, whereby we lost around 10 pips. Then currently we hit the BE, and I'm still hoping that we are going to continue with the buys. So on Monday, that is now some few hours, I think 2 hours for the market to open, but I will look forward to be trading during the London session. So this is what I'm expecting on this pair. I'm expecting the push. Maybe we can have what we call a CPR, capture, pain, then push to the upside. So I'll be looking forward to buy Euro GBP. But on the GBP itself, I'm not currently comfortable since I don't know the current buyers on the GBP. Another trade that we took is on this, what we call the Euro GBP. We were on a win. So that is one loss on the GBP. On the Euro GBP, we took a loss on over 10. Then we had a Euro pushing to 184 profits. Then Euro GBP, we had a push. Maybe I think we took around, was it around 20 something? Let me show you. Yes, we managed all the way below here to this count over here, whereby we managed to take around 80 pips. So that was not very bad. So 80 pips, not that bad. Then something else you need to check on the Euro JPY. On the Euro JPY, I will also be continuing to look for more buys. We took this trade that was back on. Let me show you, when was it? This trade I've been holding. This is date 9. So we've managed to we managed to bag 291. That's crazy. That's crazy money. So we managed to push there. So I'll still be buying. Let me just mark. So remember, each and every trade that I took is actually documented in the videos on the YouTube channel, so you can go and check out on those kind of videos on how I managed to execute those trades. So I'll be still be looking forward for the Euro JPY to push to the upside, or maybe from this kind of a demand over here, then push to the upside. That is actually what I'm looking for the Euro JPY. Continuation buys. Something else you need to check is on Euro CHF. This was a very clean loss. I ain't gonna lie. We didn't even manage to close some partials over here. I ain't gonna lie. So we managed to lose. Regardless of the Euro being strong, we still have CHF, which is actually being favored by the global, that is now the GGT support. This over here, GGT. That is now the global geopolitical tension. So CHF is taken as a safe haven. Then we had that kind of a crazy, and then we lost around how much did we lose? Yes, we lost 19. So we lost 19. That is now a total of 29 losses, which is now quite very good. It's not that bad, I would say. Something else, what I will be looking on this pair, I will be looking forward to stay away from this pair. That is now Euro CHF. I will not be looking forward to execute any trades, regardless of the price being at this kind of a demand over here. So I will not be looking forward to trade any like this pair. We had another trade on the GBP JPY. This was a very good win. We managed to bag. How much did we manage to bag? Yes, 327. You can see here. Remember, every trade that we took is actually documented on the channel. So you can head over to playlist and go and check what we call the trade taken or trade journals. So I'll be looking forward to also to be continuing to buy GBP. This is not this GBP JPY. I'm not comfortable with it, but if I happen to get an opportunity, but this pair I will not have to trade due to what we call GBP. I don't have a straightforward buyers, so I will have to choose to stay away. For the people who will be trading this one, you can be looking forward to be buying on this pair, maybe over here from this kind of a retest. Then a demand, you can check to buy from this zone, then to the upside. This is quite very simple. CHF JPY, I'll be looking for more buys, being CHF is being supported, and then we have geopolitical tension in Japan, so we might also see that kind of a push to the upside. Regardless of I don't think whether Japanese government intervention will be in a position to push this kind of a Japan, to favor Japan. Yeah, since I don't think so. Geopolitical tension tends to weaken the currency crazy. So we might see the push all the way from here, demand zone over there. Then we can see a push all the way to the upside. Something else we need to check on the GBP USD. GBP USD, I was looking for sales, but I will not trade this pair. But for the people who are looking forward to be trading, you can consider coming back all the way from this kind of a trade, a demand zone, then a push to the upside. You can check on that. It is quite very simple. USD JPY, we took a trade. Did we take no? Yes, there's a trade. There's a small trade I took over here, and I lost. Yeah, it was around 20 pips. Yes, I ain't gonna lie, but I didn't manage to document this trade. But for the people who are into my Telegram channel, and the WhatsApp, they can also confirm with me that, because there was a trade I took all the way from here, and then I lost that trade after the intervention fear. But I'm still looking forward not to trade USD JPY. So for this one, I will not be trading this pair. But if you were to trade, you can consider all the way from this kind of a demand zone here. Then you can see a push to the upside. It's that simple. Something else you need to check is on USD CHF. We took a loss, a clean loss. This was a stop hound, crazy stop hound. We had to hit the stop loss and then go into our direction. Here is the trade. Check how we got taken out. We were taken out. I was looking for sell on the USD CHF. People from my channel can really confirm with that. So we took that clean stop hound of around how many? I think it was around 20 pips. Let me check. No, it was around 30 pips. Yes, 30 pips, which is a very good loss. And I'm still also continuing for the to sell on this pair. I'm looking forward to continue selling USD CHF. So if you have a pullback, if we happen to have a pullback from this kind of a supply over here, I might be looking for a clean setup for this short position all the way from there to the downside up to that position. Something else we need to check, what kind of other, what else did I trade? Yeah, I think those are the only trades that I managed to take, and actually we can call it a day. So a very quick recap on how I'm looking forward. I'll be looking very quick recap based on the fundamental outlook. I will be selling USD. I will be selling USD. I will be buying Euro. I'll be looking forward to sell GBP, and then I will be looking forward to sell JPY and a strong CHF. Now, the bigger problem comes here. Which is the best currency pair to trade? And I'm going to leave it with you. If you want to know better, you can actually consider joining the Telegram channel and the WhatsApp group, which is actually free, and we can show you what actually we do with. So I go by the name of Kelvin, and I'm a currency trader and also a trading coach at RatePulse Market. This is all. You can consider subscribing, and also you can consider following across our social media, and for the bigger fundamental kind of insights. See you next time. Let's go. I want to wish you the best in your next week trading time. See you next time.